More on the line from Brisbane is Lev Mizikowski, the chairman and managing director of home builder Tamerwood. Tamerwood and its brands, including Dixon Homes, gets money from building new homes, charging for product management and franchise operations. So, Lev, what is happening to the housing market there? Does it look like that it's turning out to be headed for a slump that's similar to the U.S.?
Yes, I believe so. Yes.
Well, how bad is it really? I mean, when you look at the inquiries that you're getting and the contract signing since the last time we spoke about late last year.
Our customers experiencing difficulties in borrowing money. So basically, there are no longer non-conforming loans available, and loan-to-valuation ratios are significantly decreased. So it's a lot less money.
A lot less money and a lot less inquiries. What indications does that say about, say, what's going to happen to the housing industry in say, the next 3 to 6 months?
I personally think that we're going to follow United States in what occurred there in 2006. But, I mean, we can only see.
Well, when you look at the average contract prices, how are they looking now?
Well, they keep on increasing because we do have inflation, and I mean, many of our Chinese suppliers have been raising their prices by as much as 30%. So it's not a lot of good news there. So as much as sales are slowing, the costs are still rising.
And for the inquiries that you're getting, or what's left of the inquiries that you're getting, are you turning them into contracts, or are they just staying in as inquiries for now?
The conversion rate increased significantly. So we have the people who do make inquiries generally have finance and committed to building. So, but less people, less uncommitted buyers making inquiries.
And so what are you putting this down to? Is the RBA to blame? Did the central bank there overshoot? Rates now hovering at a 12-year high.
I think non-bank lenders lost the ability to secure funds. And of course, obviously, as I say, it impacted non-conforming loans, and it's impacted loan-to-valuation ratios. So basically, our estimates that it's as much as 40% less funding available for home buyers. So
and there are less committed inquiries that you're getting. Lev, what does that tell you about the health of the consumer in Australia? Are they still spending as much, or are they getting more cautious?
I think consumer probably, well, look, we have an enormous shortage of both rental accommodation and owner-occupier housing. So it's not a lack of desire to purchase, at least at this stage, but they are unable to get funding. So if funding is not available, I mean, I suppose deals are not going to be done.
So do you think the RBA would have to cut rates before the year is out?
I don't think it's an issue of rates, because what we're basically seeing is that a significant number of potential customers are cut off now because of non-availability of non-conforming finance. So people that have contract work, people that in their own businesses are no longer able to borrow. So that's taking a percentage of potential buyers out of the market. And as much as they're willing to buy and probably can afford to pay, they no longer can get finance.
Okay, good to talk to you, and I hope things get better down there.